You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Back to the top story and some breaking news that we continue to cover. Dozens of Democratic lawmakers are considering signing a letter demanding President Joe Biden withdraw from the race. A senior party official said as panic mounts that he'll cost them control of Congress. This exclusive report coming just in the last 10 minutes from Billy House and Eric Wasson. Billy is Bloomberg News congressional reporter. He joins us from our Washington, D.C. bureau right now. Billy, the calls for Biden to step aside are growing increasingly louder. This time, though, it's coming from lawmakers who are concerned about Congress. What did you learn?
Yeah, there's a draft letter that's prepared for signing, has not been sent out, but it is being circulated from safe seat Democrats. These are Democrats from traditionally safe seats, non-competitive areas. This underscores that it's just not people worried about losing their elections who are concerned about Biden staying on the ticket, but those who likely will be reelected and concerned about the state of Congress as a way to put a brake on perhaps a Trump presidency.
Billy, this is such an unusual situation. Obviously, I can't ever remember in my many years on this planet of the House Democrats actually moving against a president like this. Do we have any sense of who will be the signers of this letter? I mean, could it be a Nancy Pelosi type of person to actually sign on to this?
I think it's far more likely to be senior Democratic lawmakers, again, from safe seats, who are concerned about status on committees, on legislation, and on ability to block the White House, Trump White House, from ramming through things. These are probably veteran lawmakers, and the question is, will they pull the trigger and actually send this letter, or will something else happen to prevent that?
Billy, is the concern here that Trump will become president and that Republicans will control Congress also? Is this a last-ditch effort at this point to have a Congress that is not in the same party as the president?
Well, the concern is that both the Senate and the House would fall because of a Biden candidacy that would derail down ballot candidacies, and the fact that Democrats are fearful of a White House and Congress totally dominated by Republicans running this country.
Billy, I wonder. You mentioned, will they really pull the trigger? I mean, is them leaking this news to you sort of enough to get that message across to Biden? Do you think that's part of the plan, is just to make it clear to Biden that this is something they're willing to do?
Could be the case, but we do know that Biden's hearing some of these concerns. In fact, he called House Minority Leader Hakeem Jeffries for a second time yesterday for what was described as a very personal talk, very private talk. And House Democrats, a group of them, got together for some legislative discussion yesterday, but that devolved into a fear-fest, panicky gripe session about what happens if Biden sticks around.
Well, so what happens if he doesn't, though? That's I think a big question as well. There's no, as Mike mentioned, that hasn't happened in our lifetimes that this late in a candidacy, a sitting president has decided not to continue, or even a presumptive nominee has decided not to continue. You go back to 1968 and Lyndon Johnson, but that was back in March when he decided not to pursue the presidency. It was before the primaries. Billy, what happens if he were to step aside?
Well, that's the big question. Of course, Hubert Humphrey didn't fare well back in '68 when Johnson withdrew late in the game. There are all kinds of scenarios, and nobody really knows for sure whether Kamala Harris, the vice president, would simply be the choice, or there would be an open convention, or what exactly would happen. And that's, or whether it would actually be a boost for Democrats to drop Biden this late in the game.
Well, Billy, what a tremendous scoop on this letter, potentially from House Democrats. How do you see it all playing out? I mean, your guess is as good as anyone's. Is this kind of look like the last straw for Biden, this type of thing happening?
It's really hard to tell, but I would suspect he has, and others have suggested that he really has just a matter of days to turn this around with performances at public events or an interview on ABC. But this pressure on him is moving faster than many expected, and people are now talking just days for him to do something dramatically to show that he's fit and ready to stay on board with this campaign.
Billy, what did you see shift in recent days? Because as soon as the debate ended and everybody realized it was a political catastrophe for the sitting president, you did have a lot of folks come out with what seemed like very manicured statements, including former President Obama, who worked closely with Biden for 8 years, and others as well, sort of mounting this defensive that seemed very coordinated. But something shifted in recent days.
Well, whether something shifted or something didn't happen that they had asked to happen, I mean, certainly the White House and the Biden campaign and the president himself had been asking Democrats to keep their powder dry in terms of calls for him to withdraw, to give him time to show that that shaky debate performance was not really the best picture of where he and how he can perform. But instead of really coming out forcefully in these few days he has not done that.
Hey, Billy, we're going to let you run because I know you are super busy. Once again, this breaking news just happening just before the noon hour, just in the last 20 minutes. Billy House and Eric Wasson reporting that House Democrats are considering demanding that Biden withdraw from the race. Billy House is Bloomberg News congressional reporter joining us from Washington, D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So, funny story. Yesterday, Tim and I do a simulcast together. I'm on TV, he's on radio, and we do a simulcast at the closing bell. And we're talking about Paramount, and Tim says...
I say, well, more news in Paramount yesterday because there were a couple reports that there were some bidders circling. And I said, when is this story just going to die? When is this going to be done?
Yeah, and then literally like 2.5 seconds later, there was a headline that said Skydance and Paramount have been talking for a deal, and they agreed on a deal.
I thought Skydance was out.
So did we, and apparently now they have a preliminary agreement. So it's so confusing. Luckily, Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst, can help us. Geetha, what is happening?
Yeah, thank you so much for having me, Alex and Tim. Yeah, it's not over until it's over, and we've seen this movie now play out so many times. But yeah, Skydance is back. It looks like they have amended some of the terms of the deal agreement with Paramount. Remember, they had been in this very, very long, drawn-out negotiating process. We're talking almost 6-7 months. And then right when they were at the finish line, somewhere in mid-June, Sherry Redstone basically just walked away, from the entire deal. But I think now they're back. And I think the one big thing that Sherry Redstone was kind of looking for, which she seems to have gotten, is slightly better in terms of the amount of cash that she's going to get paid. So I think previously it was about $1.7 billion. Now it's $1.75 billion. But I think more importantly is that she is getting stronger indemnification language in the deal agreement, which basically protects her from any potential lawsuits. That's something that she has been pretty worried about, because remember, the Skydance deal basically favors her over everybody else. So that is obviously breeding ground for a lot of litigation. And the one thing I think that is going to work for Skydance and David Ellison is that there is no longer this requirement for the majority of the minority shareholder approval, which was kind of a non-starter for David Ellison. So I think she has said that, okay, we don't need that anymore. So that's where we stand right now. We're really not sure about, if there are any deal sweeteners for the Class B shareholders or what else is happening in terms of the other deal terms.
Yeah, this is a very complicated deal, and it's also, given the dual class share structure, makes it even more complicated. Geetha, I'm wondering who gets what. Lay it out for us, because we know David Ellison, who's, we should note, is the son of Larry Ellison. He's a film producer. He's certainly interested in the studio business. But who gets what if this deal were to go through?
Yes, I think what is going to happen is, obviously, as you said, this is an extremely convoluted, complex process. So in stage one of this deal, it's a multi-step deal. In stage one, what is going to happen is Skydance is basically going to acquire National Amusements. Now, National Amusements is the parent company of Paramount.
Okay, I'm just getting out the whiteboard to make a diagram here.
Actually, that's a good idea.
Yeah. It holds about 80% of the voting stock for Paramount. So they're going to go ahead and do that transaction first, and then once that's in place, then Paramount is going to merge with Skydance, so it becomes one whole combined entity. And then obviously right now you have this really kind of funny structure at the Paramount. So they basically fired their previous CEO, Bob Bakish, and now they have kind of this three-headed CEO. So they have three different division chiefs who are heading the company as kind of the stopgap arrangement. So I think the plan is, once David Ellison takes control, he's going to have Jeff Shell run the whole thing. And remember, Jeff Shell used to run NBC, so he's extremely familiar with the media business. So that is kind of the tentative plan. But again, we'll have to see. And I think the reason why Sherry Redstone prefers the Skydance plan to, let's say, the Sony Apollo plan, which actually gave better financial terms to the rest of the shareholders, was because they were really looking to sell a lot of the assets and only keep the studio. I think what Skydance has promised Sherry is that they will keep the company pretty much intact before they start looking to kind of dispose of assets. And I think that was very important for Sherry and kind of her preserving her family's legacy.
So one key point, though, was the majority of the minority of the voting shares won't have to vote on this deal. How are the majority of the minority voting shareholders going to feel about that?
Not good. And that's been the feeling all through, right? Because this was Sherry Redstone basically having her payday at the expense of everybody else. And so they have been threatening, Mario Gabelli especially has been extremely vocal about this. He has been threatening litigation. He said, don't go down this path with Skydance, because I'm definitely going to sue you. Everybody else is going to sue you as well. So obviously they do not like this, which is why, Skydance was kind of putting in all of these different deal sweeteners for the Class B shareholders, even for the Class A shareholders. But again, I think Sherry Redstone, especially when, about 3 weeks ago when she said no, was again scared of all the litigation that was going to come her way. And I think the other thing that has happened, Alex, over the past few days is, the regulatory environment. I think there's a whole different perspective of what might happen in Washington right now. So I think initially we were kind of looking at a regulatory process that was going to be extremely difficult for these companies to cross the finish line. If you have a Trump administration, that whole climate definitely changes. It eases things up. It's pro-consolidation. So I think maybe that these companies are looking at it from that perspective as well. That's
interesting. I mean, that's a big bet to make ahead of an election where a lot can still happen. I think many people would argue. Geetha, I don't have to tell you this, and I don't have to tell much of our audience this, but media is a tough business right now. And I'm wondering what makes these assets attractive to this buyer. We're in an environment where we're seeing traditional linear TV just completely fall apart. The movie business is being taken on by it's not even fair to call them upstarts, but the streamers. The legacy companies are trying to adapt to become streamers with very mixed success, I think it's fair to say. What are the attractive parts of Paramount's business?
Yeah, so definitely not the TV networks. One could argue that...
Okay, Survivor is still awesome, okay? Let's just put it out there. You know how I feel about this, Geetha.
Yeah. Well, CBS, I was going to say CBS is actually the one crown jewel in the whole Paramount TV portfolio. And obviously that has, Survivor, that has all of the NFL, all of the sports rights.
Thank you.
It has a pretty robust news lineup. So, when it comes to sports and news, which CBS has, they're actually in a good place. It's the rest of the Paramount and the Viacom cable networks that are really not in such a good place, which is, Nickelodeon, Comedy Central, MTV, VH1, all of these other channels, which are general entertainment channels, which have basically been exposed to the most rapid kind of deterioration in terms of audiences. So obviously that part of the business, I'm not really sure who would really want. Maybe Warner Brothers Discovery. Maybe they see that there's, there could potentially be some kind of synergies there. But again, Skydance, I know, is not obviously very excited about that. The one asset that Skydance is definitely very excited about is the studio. And remember, they've had a long history with Paramount. I mean, they've financed so many of the movies, whether, it's Transformers or Mission Impossible. So they know
the new Top Gun too?
Mm-hmm. Yeah,
okay.
The new Top Gun as well. So they've had a long history with Sherry Redstone, with the Paramount studio business. And remember, at the end of the day, content is king. And they know that. And, whether the Paramount Plus streaming service works or not, I mean, this content is still valuable, and they could sell it to Amazon. They could sell a lot of this content to Netflix. They're already doing some deals. But again, the content is definitely valuable, and there is definitely this arms race for content. So, I think they definitely want the content production piece of it. Again, you're absolutely right that the TV networks is going to be a little bit hard, but I think that's what Sherry Redstone also realizes, and she realizes that the longer this process kind of drags out, the less and less valuable those assets are going to be.
Do we think that Paramount stands a chance? Like, what? Okay, let's just say this actually happens. What's your time frame? Like, let's give them a year, 6 months?
You mean as a standalone company?
Yeah, like until you say, okay, this deal is a success, or the deal was not a success. Yeah.
Oh, okay. So once the deal actually goes through, I think, it would take at least about 12 to 18 months to kind of get the whole integration done and to kind of figure out what the path forward would be. Mm-hmm. I think it would, and we're also kind of looking at this broader media landscape also, Alex, in terms of what could happen in terms of other deals, right? What is going to happen with Warner Brothers Discovery? What's going to happen with Peacock and NBC? And there probably is a whole wave of consolidation coming. It's just that the regulatory climate right now looks extremely difficult.
All right, Geetha, we really appreciate it. We appreciate you in all these circumstances. Geetha Ranganathan, Bloomberg Intelligence, U.S. media analyst. Yeah, I don't know if Tim knows this about me. I'm a big Survivor
I didn't know that about
fan.
you.
Yeah,
no.
We got into it when I had a concussion in November, and then my family and I, we have like joint Survivor family night. We talk about it and we learn things. It's like a whole.
What season? It's like season in the 30s or
we
something?
bing bong. No, 46, baby, 46. We bing bong all over. We're currently watching, I think, season 36. We kind of just go where we feel. Okay. And then, it's a guilty secret that I have that I apparently share with Olive Radio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
If you go to READ Go on the Bloomberg terminal, you can see the most read stories over the last 8 hours, over the last 1 hour. You can play around with it. And one thing that you're seeing right now is the most read story in the last 8 hours is JPMorgan's Kolanovic to exit amid string of poor stock calls. We're very lucky to have with us this morning Alexandra Semenova. She is Bloomberg Equities reporter, and she's here in our Bloomberg Interactive Brokers studio. This was huge news. Congratulations on the scoop. It's got a green B, or black B in a green circle on the terminal, which means it's a Bloomberg exclusive. You were the first to report about this huge news happening. What's going on?
Yeah, thank you guys for having me on. So obviously pretty significant that one of the most prominent forecasters on Wall Street is leaving JPMorgan. He's been at the firm for 19 years. He, most recently has become known for being one of the few remaining contrarians on Wall Street, sticking with his S&P 500 target of 4,200. That's a drop of more than 20% from where we are now before the year ends. And it's been a bit of a challenging run for him over the last 3 years. In 2022, he was bullish through much of the rout that we experienced. Last year, he stayed bearish even as the S&P 500 rose 24%. And then, of course, this year, he's kind of stuck with that call in the face of the rally. So, it's always a tough job to try to predict the market, but especially when you're in a very, prominent position like that, making calls as the face of JP Morgan's research team.
Alexandra, what I find interesting about Marko Kolanovic is he was one of the first strategists who sort of looked at how some of the big quant funds were trading and their influence on the market. Most strategists look at what they expect earnings per share to do, what they expect for, interest rates, that sort of thing. He really got in the weeds on, your volatility targeting hedge funds and momentum tracing CTA funds. What exactly in his thinking led him to believe that we're due for this bearish turn this year? Yeah,
as you point out, Mike, the guy's brilliant. He has a PhD in physics. He has obviously been very focused on the quantitative aspect of all of this. He's been talking a lot over the last few years about very low volatility and how that's been an issue for markets. So that has definitely been part of his call recently. He is saying that a lot of people are, too optimistic given the macroeconomic backdrop. He says that we're at the end of this business cycle, that with sustained higher rates, it's going to be very difficult to achieve the growth that appears to be priced into equity markets. And he was just, insisting that eventually we will get that drop that he's calling for.
So if I go to your bio page, I see all the stories that you've written in recent days, and you have to scroll a lot because you've written so many stories. You have an interview with David Kelly, JPMorgan Asset Management, and his call that he shared with you was polar opposite of Marko Kolanovic's call.
Yeah.
These two guys work at the same firm. They're making different calls. They're out there in public. How does that relationship work? How does it work that they're not sort of espousing the same thing? Is that hard for employees there? Like, help me understand how that works.
Yeah, so that's been
There's not like a unified
really
front.
interesting. So technically, it is really a good thing to have different views under one roof, a diversity of opinion. But it feels like it's been more pronounced over the past 2 years as a lot of people are struggling to predict what will happen. And it's certainly been pronounced at JPMorgan. Their trading desk, actually led by Andrew Tyler, they're very bullish. Andrew Tyler has said that his outlook doesn't depend on interest rate cuts, that the economy is good, that earnings are strong, and the equity run can continue. And then, of course, at JPMorgan Asset Management, David Kelly also very constructive on equities. He does say that he doesn't really like the Mag 7. He says stay away from the top 10 stocks if you're a long-term investor. He wants to, he recommends avoiding some of what he thinks is froth forming at the top, but he overall does think that, maybe things will broaden out and that so far equities can chug along. So very different views from Kolanovic.
It's interesting. It's not unusual for there to be sort of turnover in these chief market strategist roles at the big banks.
It's a hard job, right?
Very hard job. I don't envy anyone who's doing it.
I always compare it to forecasting the weather on New Year's Eve of 2027 or something like that. It's an incredibly difficult job. But, Kolanovic was such a brand name. How did you sort of catch on that he was leaving the firm? I mean, is there any drama there? Do we really know what's going on as far as why he's leaving?
Yeah, so, very interestingly, some sources have told me that he wasn't at their recent conference in Paris. And then JPMorgan did have a webinar for their mid-year outlook, and he did not participate in that. So we definitely can sense some of the pressure going on, perhaps internally, ahead of this news and ahead of this announcement. And to that point, now Dubravko Lakos-Buhas, who was the chief equity strategist, he is moving on to take on Kolanovic's role as chief market strategist. And Hussein Malik, who was co-head of global research with Kolanovic, will now be the sole head of global research. So a lot of moves going on the research team there overall.
Hey, I want to remind everyone of some breaking news that we've been covering over the last hour or so. The drumbeat of pressure on President Joe Biden to drop out of the presidential race intensified on Wednesday with a bombshell report in the New York Times that he had conceded to an ally that he might have to abandon his re-election bid if he was unable to turn around public opinion in the coming days. The White House and Biden's campaign quickly denied the report, but time is running out for the beleaguered president to convince anxious Democratic officials, donors, and voters that he remains viable in his efforts to keep former President Donald Trump from returning to office. We're going to continue to have coverage of this developing story as more information does break. Alex, I just want to end with you and sort of get the last word here as to what we know about next moves for Marko. We know, what is he going to be working on?
Unclear what the next move will be. I'm very keen to find out, but it is very common for strategists at these banks to sometimes move on to open up their own research shops. The most recent example that comes to mind is Adam Parker, who was chief U.S. equity strategist for Morgan Stanley. He is now running his own firm, Trivariate Research. So a lot of that could happen. We'll definitely stay on top of whatever his next move might be.
Tom Lee was the head of equity strategy, JPMorgan too.
Yeah.
And he's been in the news a ton lately.
Yeah,
Quite a
maybe this is what the market needs.
15,000 call for the S&P 500. I think I saw on Odd Lots.
Yeah, 15,000 by the end of 2030.
Wow.
I think it was.
Okay. So quite a bit.
Yeah.
Hey, Alexandra Semenova, Bloomberg News equities reporter here in our Bloomberg Interactive Brokers studio. Check out her story. It is the most read in the last 8 hours on the Bloomberg terminal. This is Bloomberg.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Okay, let's get to that ISM Services. As Charlie was just saying, you had yields dropping after ISM Services coming at a 4-year low. Steve Miller, ISM Services chair, joins us from Fort Worth, Texas. Hey, Steve, what is happening?
Hi. Good morning, Alex. It was a surprise for sure. We saw 3 of the sub indexes dropping from last month, and we think that's definitely what drove the overall rating down. The only the business activity, new orders, and employment were in contracting territory. The supplier deliveries stayed in expansion territory, but with a small drop.
How do you explain it? I mean, we get the numbers. We have the data in front of us. As you mentioned, it's a surprise. Lowest in 4 years. How do you explain it?
Well, what we saw from, so 2 months ago, we saw a contraction reading. And then last month, we saw a bump up, hoping that was a return to growth. But what we saw was real estate rental and leasing returned to negative. Transportation and warehousing returned to negative. And we saw mining consistent negative, and information and wholesale trade also swapped from growth to contraction. So we saw a pretty significant shift from many companies in the growth mode to contraction.
So is this like bad news, like recessionary harbinger thing, or is this just a softening? Like what's the read ahead?
Yeah, one of the things that we saw in the numbers was a continuing commentary on costs being high, but we saw some backing off of the rate of increase. So we're hoping that this is a blip, and from the overall commentary, there was a bit of a mix in terms of positive of sustained business, meeting plan. So it didn't seem like a shock from the overall commentary, but it certainly wasn't good news.
Yeah, that's what I'm trying to. Is it good news for the Fed though?
It kind of the down, up, down that we saw this month and the last 2 months certainly gives some credence to the Fed in saying, let's look at things for a little while, make sure that we're seeing that stabilization before rate cuts.
So just one more question then. The consumer, does this show that the consumer is slowing and buying less stuff?
Well, we saw retail trade for the second month in a row in contraction mode, and then wholesale trade went from expansion to contraction mode from last month to this month. So I would say yes.
All right, Steve, we're going to have to leave it there. Thanks so much for joining us. Steve Miller is ISM Services chair. He joins us from Fort Worth, Texas. Once again, June U.S. ISM Services falling to 48.8, below all estimates.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg terminal.